I've got the screen share active. Mic is active. You should all be able to hear me fairly well now. It's Monday, the 20th of April, 2015. Just welcome everyone. It is a live webinar broadcast, so just a quick reminder is worth if you are using any of the program bandwidth to close those down, Skype or TweetDeck, stuff like that, and that way you should receive a fairly uninterrupted broadcast. Hope you've all had a great weekend. We're heading now into the final throes of the month of April. It is the first month of the second quarter of the year, and it does appear as though the market has been struggling to make up its mind about which direction to take. Hopefully, we should be able to offer some clarifications this morning. As far as the economic calendar is concerned this week, there's not a great deal going on, although there are some numbered items which will be worth paying attention to. On Tuesday, we have from the Reserve Bank of Australia the monetary policy meeting minutes, and on Wednesday we have Australian CPI, which will be the quarter-on-quarter figures. Also on Wednesday, the Bank of England releases the official bank rate voting pattern. That I think will be worth keeping an eye on, only if there is a change. So there was a short period last year where it went to 8.1 and then it came back to 9.0, and everyone expects that it's going to stay at 9.0 probably until right after the elections, although if you've been following the financial press this morning, it does look as though people have started talking up the UK economy again in a similar kind of fashion that we saw last year. So there's this whole discussion about how growth is going to be massive, regardless of which party wins the election, or if indeed, like last time, if all of them end up winning the elections. On Thursday, we have European flash PMIs, and we also have UK retail sales. So maybe some opportunities there for some intraday volatility. A cautionary start to the week. It's a cautionary start to the week. It's we've seen we saw over last week some rallies against the dollar falling a little bit out of favor, and I'm sure it's been knocking a few positions sideways, and you're going to get that from time to time. But overall, the issue, when you see that kind of move, the real kind of issue, and the question that always kind of comes to most traders' mind is, hey, is this the beginning of a new trend? And so at that point, the technical analysis concepts really become important in terms of how you're defining a trend. And what I tend to do is I just look at the nearest structural support or resistance area, and I say, well, so long as the nearest resistance is holding or the nearest support is holding, then I can consider the trend to be intact. And only if I find that nearest support resistance level having been breached, I would say that perhaps there is a deeper correction taking place here, or indeed it is entirely possible that we could be seeing a change in the direction of the trend itself. So first up this morning is the Euro USD, and I maintain my long-held view, and I think we've discussed this practically every time this entire month, and in fact since that spike formed. And that happened right after the NFP news release in March. And ever since that time, we've kind of maintained that, there's a resistance here. And that, I don't know, if we had to give it a name, because it is a often repeating structure, and the longer you watch the markets, the more familiar you become with it. But I'd say, that's a spike to resistance. So she traveled almost 500 odd pips to reach that level, and then there was a strong rejection from there. So we've been shorting the level ever since. So the question now with the current pullback that you're witnessing here is that really going to extend that far and give another opportunity to be shorting that level? Certainly, if she does extend that far, I'd want to be looking for failure at that level, and H1 bearish bars, H4 bearish bars. That would be enough to trigger the short play. But there is a question at the moment about whether actually she is going to extend that far. And what I would be doing and what I'd be paying more attention to at the moment, rather than looking for that technical resistance, is to say, is to say, is the flow on my side? And I think that would be the right question to be asking at the moment, right? So, 1050, that's your ideal. And if you've got entries from 1050, I think you're going to be in a very happy place. And there does remain downside on this instrument. Yeah, she struggles at the nose right now, so there's a bit of a nose here, and she's kind of struggling to breach that area. But I think that eventually she will breach it, and when she does breach it, there will be a lot of room to the downside. So the question to be asking right now in Euro USD when you're positioning yourself, I think, is about flows. Just what you want to be sure of, or what would make a good entry condition, is to say, hey, so long as the direction of the week is on my side, and so long as the direction of the month and the direction of the quarter is on my side, then I'm quite happy to be placing casual shorts on this instrument. Otherwise, if there's a deeper rally, if she rallies higher and she does go and hit that 1050 area, then that is where the structural resistance lies, and that would be the area to be looking for the best risk-defined short play on this particular instrument. So Euro USD, it doesn't matter that she's rallying. The downtrend is intact so long as she remains below 1050. The real question is about how do you get good risk definition in order to be able to take that trade effectively. One moment, guys. I'm just going to put the phone on silent so we're not disturbed by that again. Right. Okay. So that's the Euro USD. We think the bears are still in charge. I know 1050 is far away. If you can't wait for 1050, you just need to monitor the flow here at these levels. And as I said, so long as you're catching a trade with the direction of the week on your side, or the direction of the month on your team, you're not going to have too many concerns there. We will look for this 105. It does come in the upper 105. So we'll look for this 105, 106 to be breached eventually, a break through the 105 and to the downside. I think eventually we're going to be chasing 101 on this particular instrument. Okay, dollar Canadian. So the last time we were here a couple of weeks ago, we'd marked the wall on dollar Canadian, and we were waiting for quite a healthy breach of that wall so that we could short the underside. There was a choice to chase it or to short the underside on retest, and lo and behold, you've now had that break. How entirely unexpected was that, huh? So what I've done now, and I think it's quite important, because you have to always take into consideration the most recent price action. So what you would be doing is to be adjusting the wall. In fact, you'd be removing that one, and this one you'd be marking it something like this. All right, so this is on the hourly time frame. You can see the hourly overlap there on the left-hand side where support has been created. You've got the support there, and as well a secondary wall would be something like this. Okay, there you go. So we have a primary wall and we have a secondary wall, and there you go. So uh, any rallies here, and in the first instance, I guess you've got to be looking at that, and a breach of that, you've got to be looking at that, and actually the diagonal would probably be my preferred entry, but nevertheless, H1 rejection from either of those walls, I think, will trigger good technical shorts on the instrument. So you're going to want to see a H1 rejection off of that in order to trigger a technical short. The counter dollar rally, like I said at the beginning, is a little bit of a cause. It is a little bit of a cause for concern. All right. So in the first instance, if I'm taking that short on the underside of either of those walls, I would look at it from a perspective of an intraday play. And what that means is not necessarily that I want to cash up the position before the end of the day flat, but if the day ends up turning bearish, I want to hold that position. And if it happens at the end of the day, the daily candle has not turned bearish, then at that point, I would want to be cashing up the greater part of that position, if not entirely. All right. So you might be sensing a little bit of fear here in the analysis which is being presented, but trust me, it's quite healthy fear. If she's rallying back up to the walls, you might get a technical resistance reaction off of those walls. But if she's back above the 24 handle, 25 handle even, then what if what if what you're looking at here is a false break to the downside, right? So what I'm meaning is that there is the range, and she does a false break to the downside, and then breaks back into it. So I'm having to take that in as a kind of consideration here, that maybe this fall is just a technical corrective move, which will end up turning into a false break or something like that. So in the first instance, I'll be looking at resistance at my walls just as technical resistance for an intraday play. And if it happens that the direction of the flow turns into my favor, then at that point I would say, all right, let me hold the trade longer. If you really want to look how far she can extend to the downside, then actually there was a let's just kind of push it there. You're probably talking. I think it's a question of how ambitious you want to be, right? Okay, but if you want to be really ambitious, you might be talking sub 16, right? So in fact, maybe even all the way down to 13, based upon the manner in which she reached these dizzy heights. It's not unusual to find these types of walls retested, right? So mark something like that, and you might also be marking something flat like this. So where are we at? 117. 117 to the downside. I think that should be quite a comfortable downside target. Be worth keeping an eye on that. I think definitely. But as mentioned, as mentioned, it's a technical play, and you do want to exercise some caution. So it's 117 if the flow changes in the favor of the short. If that direction of the flow is not changing, then there will be little purpose in holding that trade for any kind of extended period. All right. So that's the dollar CAD. It's a technical short on the underside of the wall, and we're just going to look for follow through to the downside, whatever it is that the market is prepared to give. We're very aware that what we might be looking at here is just a corrective move in those sustained dollar rallies that we've seen over the coming months. I guess what it's really going to take is, now that there's a very solid expectation that the Fed is going to be raising rates in June. How many central banks have we seen go right to the brink and then back off? All of them except the Reserve Bank of New Zealand, right? So, maybe the Fed goes right to the brink and then backs off, and then at that stage you might consider for a sustained dumping of the dollar to be justified. All right, so until that happens, until we've got, I guess, all of our technical and fundamental triggers marrying and aligning up, we're not going to get necessarily too overambitious about this one. We're going to continue to believe in the dollar until we really are given reason to do otherwise. And you know what? If she's going to fall thousands of pips, I don't mind missing the first 1,000 so long as I catch the last 100. There's not really much of a issue with that. So we'll see how she plays out over the course. What else are we interested in this morning? I guess it's worth taking a look at the GBP AUD. That's something that we've been on the case with over the last few weeks. So, right. So GBP AUD, we're still looking to play out our sine wave completion. She did reach from the time that we first started calling those shorts. She did reach very comfortably that first target to the downside, which gave us a trade extending well beyond 1,000 odd pips. And then from a couple of weeks ago, we started calling short again on GBP AUD, and the new downside target that I have for the instrument is 178, 179 price handle. And so we're going to continue to see, any kind of rallies here. We're going to continue to look for them to fail. Principally now, you're going to be looking for failure sub the 195 price handle. So if she's rallying towards the 195 handle and you see your H1, H4 bearish bars, and in this instance, I'd say just wait for a H4 bearish bar. The target is substantial enough to the downside. It doesn't really matter if you miss the first 40 or 50 pips, right? So a H4 bearish bar as a trigger off the 194 price handle, and I think that becomes cause for initiating shorts. If she fails to fail at 94, then at that point, the next time I would have interest in shorting her would be with a strike on the underside of said walls. And again, I'd want to see H1, H4 failure at those walls before triggering those trades. In the near term, if it happens that she decides to break down before extending to that 94 price handle, and you're getting a H1, H4 close below the 89.90 price area, so you get your H4 close below that, then I think that you can trigger a casual short on that, stop above the high of the candle, and look for follow through at that point. All right, so at GBP AUD, we're still very much interested in chasing her to the downside. we're selling a rally up to the 94 handle. Alternatively, H1, H4 closes below 89.90 become the trigger for casual shorts. And in that instance, you'll be using the size of the body of that candle in order to define the risk in the trade, seeking 178, 179 to the downside. So GBP/AUD still remains very much on the radar, and if previous analysis is on this pair or anything to go by, then I think we're going to have a pretty good run. We're going to have a pretty good run on this particular instrument. Someone's asking about GBP/USD. Jen Sora is asking about GBP/USD. Okay, I'll turn to that in a moment, but this is a quick note. GBP/AUD being an almost derived pair, not entirely derived, but being an almost derived pair. One of the questions which always comes up with this one is whether it would be a weakness in the pound or a strength in the Aussie which drives this one lower. And to my mind, I think it'll be strength in the Aussie. All right, I think it'll be strength in the Aussie dollar, which will actually be what drives this lower. But okay, GBP/USD. All right, GBP/USD, as you can tell, all right, there's not a heck of a lot that I've got marked there. In the near term, in fact, I think I marked these last time I was here and someone asked about GBP/USD, right? So let's do this fresh, where I'd be looking at. Okay, the area that you want to mark is this one. That one there. Let's drop to a H1. Yeah, okay. All right, that cluster which is marked there is the cluster that will determine the directional flow on the instrument if we take the direction of the candle away from the equation just for a short moment. And so what I'll give, it's a general kind of guidance on it, right? So what you've seen here happen at the structure is that she pushed into it, she was rejected, she broke through it, and then she found support. All right, so it is resistance and it is support. Any pullback into that in origin, you would look for support, and that gives you, I think, 48.53 or something like that if you're looking at for a pinpoint level. So long as let's just round it, right? So long as she remains above 48.50, technically the bulls remain in charge on this particular instrument. If it happens that she breaks below 48.50, so you're getting a H1, H4 below that, then I think at that point you could start chasing to the downside. And probably if you're playing this from cluster to cluster, the last cluster flip area that you had was at the 46.80 area, right? So 47 price handle. So you'd be playing it down to the 47 price handle. But so GBP/USD, I'd say in the near term, it's that cluster there which is defining the trend. If that is breached to the so in origin, you're going to look at that as support. I think that's the important issue, right? So saying, hey, would you be buying right now? Would you be selling right now? I'd say so long as she remains above that cluster, I'd be a buyer. A break below that cluster, and that changes the direction of the flow in a southerly direction again. All right, so that's just near term. That's looking at it from a very near term perspective. Note there that your monthly open is also coming in around about 40. price handle. So the direction of the month is being defined by 4830 itself. On a general note, and I think I mentioned this the last time I was here, which is that 5 years ago, yeah, about 5 years ago, at the time of the last general election, almost. Um, uh, Sorry, not 5 years ago. Yeah, whatever date that is. Let's have a look. Yes, 2013, 2 years ago. The then governor of the Bank of England, Mervyn King, he kind of expressed uh, concern about the value of the pound at these levels, and he made a verbal intervention by saying that the price had fallen far enough. Um, we're on the lookout for some kind of verbal intervention. We just want to know if that remains the stance of the Bank of England, that uh, if they consider that the currency is weak here at these levels, I think that that's something just to be on the lookout for, right? See if there might be a fundamental trigger that ends up pushing the instrument higher from here. But from a structural point of view, on these higher time frames, she could rally even 300-400 pips from here, and generally speaking, it would still be considered a short play, right? So, from a structural point of view, what you really got going on here. Sorry, just had a little bit of a crash here. Just excuse me one moment, guys. What you'd really want to see is something like that. You want to see actually her breaching through that area, and it doesn't matter if she rallies 400-500 pips, but once she's breached that last resistance area, then on a pullback you could start looking for support and then a move higher, right? So until you get that structural change, right? And until you get that structural change, any uh, buying on GBP USD, I think remains speculative. All right, I think it remains speculative. So you can look for the support resistance clusters, you can look for the trend rules. That's all good, but just be aware that on the higher time frame, you haven't really got that structural change taking place. And until that happens, I wouldn't really get too excited. If you're speculating and you get it right, the next time when you speculate, it might set you up for a greater fall, right? So we'd rather have price confirming our directional bias than having an overactive imagination about a reversal taking place when continuations are much more likely and much more trader friendly. Okay, so that's the GBP USD. Okay, last couple that I want to be looking at this morning, and again, we tend to visit these often. First up is NZD USD, and again, I've had a bearish bias on Kiwi dollar, I think now since before January 2014, but from January 2014, we really kind of went for it, selling every single rally, looking for the instrument to make a move lower. There are a couple of areas of interest here. There is the immediate area where she is right now, and if you're looking for it, there is a trend rule somewhere here. There's a trend rule somewhere here, right? Okay, I'm marking it rather loosely now on my chart, looser than it should be. But there is a trend rule somewhere here, and it's in fact, even if you've even if you've marked it as crudely as I've chosen to take it here, uh, any rally, so anywhere between market, right, and a rally to that wall, I'd be looking for a short play, right? And we're going to be looking for the instrument to break down and a resumption of the bearish move in the Kiwi dollar, right? So if you're looking for a bear move in Kiwi dollar, this is the place to be doing it from. Well, this is the first place to be doing it from. You can follow any H1 or H4 bar. It doesn't really matter, but just looking for that follow through to the downside. Once she's fallen to about the 76 price handle, you can look to start thinking about adding shorts and building a more substantial position. All right, so we tried selling Kiwi last week too. We didn't do so well trying to sell Kiwi last week, but we're on the case with shorts on this instrument, and we're looking for failure in this instrument, and our downside target is 0.65. So, here I am again, with those, it's like every time he opens his mouth, there's 1,000 pip target, right? But we're looking at 0.65 to the downside, and for good reason, right? The Reserve Bank of New Zealand, they've actually given 0.65 as their target to the downside on the Kiwi dollar. And until they start expressing a view otherwise, even if she rallies, and even if she rallies quite far, we will still be looking for a resumption eventually of those bearish moves. So this is the first place to be doing it from. And if it doesn't work out so great here, then the next area of interest is going to be up here, which is extending to around about the 80 price handle. And the reason for that, or the logic behind that, was that that move there was actually caused by an intervention by the Reserve Bank, and consequently, if she does push as far as the 80 price handle, we're going to try and see if the Reserve Bank is prepared to go again, and so that becomes an area of interest. Right. So Kiwi dollar, I'm playing the shorts at these levels, and I'm going to look for follow through to the downside. I'm looking for fresh lows on this, and if she's falling sub 76, sub 76, I'll be adding to those shorts and looking to build a sizable position as we make our swing towards the 0.65 price handle. NZD-JPY, similar kind of story. We want to be selling this, and I think that from a structural point of view, there's a very ugly double top here, which is formed at the 94 price handle. And so long as she remains below that, then chances are, if that is a double top, the last time she fell down to the 83 price handle, the next swing to the downside might push to 73 or something like that. But certainly, if you're counting a new high-low structure, there's your high, there's your low. We're looking for failure here So it's going to be what do you call it? A higher low. Am I using the right terminology? I don't usually do these types of wave cans, right? Right, higher low, and then the next swing then becomes a lower low. All right, so NZD again, we're looking for the short play. The only opposing analysis on NZD from the current price action and from the current technical structure is that if she rallies and makes another double top at the 94 price handle. So again, this is the kind of earliest area or the safest earliest area to be getting involved at. And then, if we fail in our attempts here and we find her rallying to the 94 price handle, we will try again at the 94 price handle to get wave failure. And if we're getting wave failure there, like I said, it does open up a lot of room to the downside and a very significant number of pips to be played for there. All right, folks, that's your luck this morning. Let me just see if I've missed anything. Okay, I've looked at GBP. Okay, Mr. Vassal thinks GBP USD will go down with Euro USD. Why not? It makes perfect sense for it to do that. Okay, do you see a pullback 48.50, a good long in view of a reversal week on Friday? Yeah, Jath, I think that's about the pound dollar you're asking. So yeah, I mean, look, it's about that cluster, right? So it's 48.50, and if that 48.50 holds it, then your bullish momentum remains intact. You can go sharp there, and you might not have to risk more than 25 pips in order to get involved. Or you just wait for an hourly confirmation off of that. But so long as the price remains above it, on an intraday basis, it is reasonable to have that long bias. And if the price falls below that cluster, it would be quite healthy at that stage to be changing your mind about the direction of this instrument. Okay. Radio, folks, that's your lot. Thank you very much for attending. I'll be back here April, May, so I'll be back here in the first week of May. Don't forget to check out my website, and if you'd like to hear my analysis every week, I do publish it on my website. You'll just have to make a little subscription. Yeah, until we meet again, have a good trading week. Thanks very much, guys. And I'll see you again. Bye-bye.